evaluating business investments and going public. In the ever-evolving landscape of business and finance, two essential components play pivotal roles in shaping the direction of companies and determining their financial prospects. These two core elements are net present value, NPV, and initial public offering, IPO. While NPV provides a crucial framework for assessing the profitability of investment projects, IPO serves as a significant milestone in a company's journey towards growth and expansion. Net present value, NPV, is a financial metric that helps organizations across the globe make informed decisions about investing in new capital projects. It quantifies the value that a particular investment could potentially bring back to the company, while considering the capital the firm allocates to realize it. In this article, we will delve into the intricacies of NPV, unraveling its significance in the world of finance. We will explain how it calculates the value of an investment by accounting for the time value of money and the associated risk, thus guiding businesses to make wise investment choices. On the other hand, initial public offering, IPO, represents a critical juncture in the life of a company. It is the process through which a privately held firm offers its shares to the public for the first time, becoming a publicly traded entity. The decision to go public via an IPO is influenced by several factors, including a desire for capital infusion, a means to reward early investors, and an opportunity to gain liquidity and exposure. We will explore the intricacies of IPOs, deciphering their importance and the steps involved, providing insight into how companies transition into publicly held entities and access the capital markets. As we embark on this journey of understanding the financial intricacies of NPV and the strategic significance of IPOs, we will uncover how these core elements underpin decision-making in the world of finance and business, shaping the trajectory of companies, both large and small. Whether you're an aspiring entrepreneur in Ethiopia or a seasoned investor on a global scale, the concepts of NPV and IPO are integral to your understanding of how businesses navigate the complex landscape of financial decision-making and growth. The importance of net present value, NPV, in business decision-making, tailored for an audience in Ethiopia. This essay provides a basic understanding of NPV and its significance in evaluating investment decisions. Initial public offering, IPO, in the context of the evolving capital market in Ethiopia. Net present value, NPV, in the Ethiopian capital market. Net present value, NPV, is a fundamental concept in finance, and it plays a vital role in Ethiopia's developing capital market. Here's a detailed explanation. Definition of NPV in the Ethiopian context. NPV is a financial metric used in Ethiopia's capital market to assess the profitability of potential investments. It helps businesses and investors evaluate the feasibility of projects, which is crucial as Ethiopia seeks to attract local and foreign investments. Components of NPV in Ethiopia. Time value of money. In the context of Ethiopia's capital market, the time value of money is of particular importance. It recognizes that money available today is worth more than the same amount in the future due to its earning capacity. Investors in the Ethiopian market need to account for this when evaluating investments. Cash flows. For Ethiopian businesses and investors, cash flows represent the financial inflows and outflows associated with an investment. These cash flows could include initial investments, operational cash flows, and potential returns from the investment. Calculating NPV in Ethiopia. In Ethiopia's capital market, calculating NPV involves identifying all the cash inflows and outflows related to an investment opportunity. The choice of an appropriate discount rate is critical, considering the Ethiopian market's unique economic conditions, inflation rates, and interest rates. The present value of each cash flow must be determined, with inflows as positive values and outflows as negative values. By summing up these discounted cash flows, Ethiopian investors can ascertain the net present value of the investment. Interpreting and applying NPV in Ethiopia. In the Ethiopian context, a positive NPV suggests that an investment is financially viable. It offers returns that exceed the opportunity cost of capital, making it an attractive option for local and international investors. On the other hand, a negative NPV indicates that the investment is not profitable, and investors should reconsider it, which is crucial for safeguarding investments and financial stability. Limitations of NPV in Ethiopia. The uncertainties and assumptions involved in projecting future cash flows are relevant to Ethiopia's emerging market. The accuracy of these projections directly impacts the NPV calculation. Optimism bias is another limitation, as those involved in investment projects may have a natural inclination to be overly optimistic, which can affect their assumptions and potentially lead to biased NPV estimates. Initial public offering, IPO, in the Ethiopian capital market. Initial public offering, IPO, is a significant event in the Ethiopian capital market, serving as a mechanism for companies to raise capital and go public. Here's a detailed explanation. Definition of IPO in the Ethiopian context. An IPO is the process through which private Ethiopian companies offer shares to the public for the first time. This event marks a company's transition from being privately held to publicly traded, and it has notable implications for the Ethiopian capital market. Reasons for going public in Ethiopia. In Ethiopia's evolving capital market, companies may choose to go public through an IPO for various reasons, such as raising capital to fund expansion, rewarding early investors, increasing liquidity, and gaining broader market exposure. Going public is a strategic move for many Ethiopian firms as they aim to access a larger pool of investors and capitalize on growth opportunities. Steps involved in an IPO in Ethiopia. Ethiopian companies planning an IPO must follow a series of crucial steps, including preparing the company for public ownership, selecting underwriters to facilitate the IPO process, and adhering to legal and regulatory requirements set by the Ethiopian Securities Exchange Authority, ESEA. Roadshows and marketing efforts in the Ethiopian capital market are crucial for creating investor interest. The IPO price is determined through a careful assessment of market conditions and company valuation, which is unique to Ethiopia's economic landscape. IPO considerations in Ethiopia. Ethiopian businesses pursuing an IPO need to consider costs and fees associated with going public. Legal and regulatory compliance is essential to ensure a smooth transition to the public market. Strong investor relations and communication are vital for attracting and retaining shareholders in Ethiopia's capital market. Real-world examples in the Ethiopian context. Provide case studies of Ethiopian companies that have successfully gone public and those that have faced challenges. These examples help students understand the unique dynamics of the Ethiopian capital market. Integration of NPV and IPO concepts in Ethiopia. Illustrate scenarios where Ethiopian companies may consider an IPO as an investment project and how NPV can be applied to assess its financial viability. Combining these concepts is essential for sound decision-making in Ethiopia's emerging capital market. Advanced concepts and the future of IPOs in Ethiopia. Discuss advanced financial analysis techniques, trends in the Ethiopian IPO landscape, and emerging financial instruments that might impact IPOs, such as special purpose acquisition companies, SPACs. Ethiopian IPO case studies and application. Engage students in practical exercises related to Ethiopian IPOs. Encourage them to analyze local companies' readiness for an IPO, considering factors like financial health, growth prospects, and market conditions. Evaluation and assessment for the Ethiopian context. Administer assessments tailored to the Ethiopian capital market's dynamics to gauge students' understanding and application of NPV and IPO concepts. Career opportunities in the Ethiopian capital market. Highlight career opportunities and roles in Ethiopia's capital market for students interested in finance and investment. Discuss the skills required for financial analysts, investment bankers, and corporate finance professionals. Ethiopian regulatory framework. Introduce the legal and regulatory framework governing the Ethiopian capital market, emphasizing the role of the Ethiopian Securities Exchange Authority, ESEA. By providing this comprehensive explanation and tailoring the content to the Ethiopian capital market's evolving dynamics, students and professionals in Ethiopia can better understand the principles of NPV and IPO and apply them effectively to local investment opportunities. This approach will contribute to the growth and development of the Ethiopian capital market. I can provide a more detailed step-by-step process for both net present value, NPV, analysis and the initial public offering, IPO, process, specifically tailored to the Ethiopian context. Net present value, NPV, analysis process in Ethiopia. Project identification and cash flow estimation. Identify the investment project in Ethiopia, such as a manufacturing plant, infrastructure development, or a new product launch. Estimate all expected cash flows associated with the project, including initial investments, operating cash flows, and potential future revenues. Determine the appropriate discount rate. In the Ethiopian context, determine the discount rate that reflects the opportunity cost of capital. This rate should consider Ethiopia's unique economic conditions, including inflation rates, interest rates, and overall economic stability. Calculate present values. Use the chosen discount rate to calculate the present value of each cash flow. For cash inflows, these values are positive, and for cash outflows, they are negative. Sum present values. Sum all the present values of cash flows to determine the net present value of the investment in the Ethiopian capital market. Interpret NPV. In the context of Ethiopia's capital market, a positive NPV indicates that the investment is financially viable. It offers returns that exceed the opportunity cost of capital, making it an attractive option for local and international investors. A negative NPV suggests that the investment is not profitable, and investors should reconsider it. This is crucial for safeguarding investments and financial stability. Sensitivity analysis. Given the uncertainty in projecting cash flows, conduct sensitivity analysis in the Ethiopian context. Test how variations in key assumptions impact the NPV to understand the investment sensitivity to different factors. Initial public offering (IPO) process in Ethiopia. Preparation phase. Ethiopian companies planning an IPO must prepare for the process. This includes conducting a thorough internal assessment of the company's financial health, growth prospects, and compliance with legal and regulatory requirements. Selecting underwriters. In the Ethiopian capital market, companies typically choose underwriters, often investment banks or financial institutions. These underwriters help facilitate the IPO process, including pricing the shares. Legal and regulatory compliance. Ensure full compliance with the legal and regulatory requirements set by the Ethiopian Securities Exchange Authority, ESEA. This step is crucial to avoid legal issues during the IPO process. Market assessment. Evaluate market conditions in Ethiopia. Assess the demand for shares and identify potential investors who are interested in participating in the IPO. Company valuation. Determine the valuation of the company. This step is essential to set the IPO price. In the Ethiopian context, factors such as industry trends and local economic conditions play a significant role in valuation. IPO roadshows and marketing. Create marketing strategies and conduct roadshows to generate investor interest. Engage with local and international investors to promote the IPO. IPO pricing. Based on the valuation and market assessments, determine the IPO price. Pricing should reflect market conditions and the company's value within the Ethiopian context. Documentation and disclosures. Prepare all necessary documents, including the prospectus, for disclosure to potential investors in Ethiopia. These documents should provide a comprehensive overview of the company and the IPO. Investor relations. Strengthen investor relations in the Ethiopian context. Maintain open communication with potential shareholders to address questions and concerns about the IPO. Listing on the Ethiopian Stock Exchange. After fulfilling all legal and regulatory requirements and securing investors, list the shares on the Ethiopian Stock Exchange, ESX. This marks the transition from private ownership to public trading. Trading and post-IPO responsibilities. Monitor share trading on the SA and continue to communicate with shareholders. Fulfill post-IPO responsibilities, including financial reporting and shareholder meetings. Growth and expansion. Use the capital raised through the IPO for growth and expansion of the business in the Ethiopian market. Explore opportunities for increasing market share and generating returns for shareholders. By following these detailed steps for both NPV analysis and the IPO process, Ethiopian businesses, investors, and professionals can effectively navigate the unique challenges and opportunities presented by the Ethiopian capital market. This approach contributes to the growth and development of Ethiopia's financial sector and supports informed investment decisions. In conclusion, the financial concepts of net present value, NPV, and initial public offering, IPO, hold significant importance in the context of Ethiopia's evolving capital market. These concepts are instrumental in guiding businesses and investors as they seek to make informed investment decisions in a dynamic and growing economy. Net present value, NPV, provides a powerful tool for evaluating the feasibility of investment projects within Ethiopia. By assessing the present value of expected cash flows against the opportunity cost of capital, NPV assists in making sound investment choices. In a nation experiencing economic transformation, the application of NPV is crucial to ensure that resources are allocated efficiently and to safeguard the interests of businesses and investors. Initial public offering, IPO, signifies a pivotal event for Ethiopian companies looking to access public capital markets. The IPO process allows these companies to raise funds for growth and expansion. In the Ethiopian context, IPOs enable local businesses to harness the potential of their operations and broaden their investor base, fostering economic development and innovation. The adoption of these financial principles, along with a deep understanding of Ethiopia's economic landscape, is vital. It ensures that investment projects are aligned with the unique conditions of the Ethiopian market, addressing issues such as inflation rates, interest rates, and the nation's evolving regulatory framework. Sensitivity analysis is also crucial, given the inherent uncertainties in the market. Furthermore, the Ethiopian IPO process adheres to legal and regulatory standards set by the Ethiopian Securities Exchange Authority, ECMA. To realize the full potential of IPOs, companies must conduct comprehensive market assessments, engaging with both local and international investors. This process serves as a bridge between businesses and investors, fostering collaboration for mutual growth. In the end, embracing these financial tools, NPV and IPO, empowers Ethiopia's businesses, professionals, and investors to navigate the complex terrain of the capital market effectively. By upholding sound financial practices and ethical standards, Ethiopia's financial sector can contribute to the nation's progress and prosperity, fostering a vibrant economic landscape that benefits all stakeholders. In the years to come, Ethiopia is poised to build a robust and sustainable capital market that attracts investment, fosters innovation, and propels the nation toward a brighter future.